On today's episode, we are going to take a quick look at Unity Software. They just reported earnings and the stock price, unfortunately, is down about 1.5% after hours. In today's episode, I'm obviously going to take a look at some of the green flags, but I'm also going to take a quick look at some of the yellow flags. There are some recent news as well that they announced in the earnings, a brand new acquisition that I thought was actually pretty cool. Like always, guys, if this is your first time here, make sure to hit the subscribe button, hit the thumbs up. For those that are not familiar, Unity, this is one of my tier 1 stocks, so this is one of my top 5 positions in my portfolio. So let's get started. All right, so the first thing I want to talk about is revenue. So revenue was $273.6 million this quarter, and this was up 48% compared to same time last year. And this is strong growth, right? Because if you guys took a look at my previous video, I think I did it Monday, where I talk about what investors should keep an eye out for Unity. I did mention this growth. So in previous guidance, so in their last quarter guidance, they estimated somewhere between 30 to 33% year-over-year growth. Even analysts were expecting somewhere between an average of $243 million, which was kind of that same guidance that Unity kind of expected, but instead they gave us that 48%. So strong growth there. They're seeing creative solutions. So for those that are not familiar, Unity has 3 forms of revenue. I want to say only 2 really drive most of this company's revenue. First is the create solution. That is up about 31% compared to same time last year. This is when you are developing a game through Unity's platform. Then they have the operate solution. This is kind of post creation, and this was up 63% compared to same time last year. This is also the biggest portion of Unity's revenue, $183 million roughly. So their biggest portion is actually growing the fastest level, and I think that is super amazing. If we take a look at just previous quarter, right now sitting at 182 million here in operate solutions. Same time last quarter, it was also pretty strong, right? We saw about we can see 146 million. So just from a quarter, it grew dramatic levels, and that's what I'm super excited. Create solutions, strategic partnerships didn't grow as much, but again, the operate solutions is definitely providing strong growth for the company. Next, if we want to take a look at some more things, let's take a quick look at what this company is doing in form of customer growth. But before we do that, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Alright, so if we take a look at customers that generate more than $100,000 in revenue in the trailing 12 months, it has jumped up to 888. And this is up from 716 a year ago. And if we compare it to last quarter, they had 837 customers. So in just one quarter, they increased their overall 100K revenue customers by about 50. I think that's super strong. Another green flag for the company. Now let's take a quick look at some of the yellow flags, right? There's always yellow flags for any company. And for me, right, Unity is definitely a high growth stock. But with high growth stocks, you normally see a company that's not profitable right now. And that's still the case, right? Right now, if we take a look at loss from operations, it's still about 55% of the total revenue. If they actually take a look at non-GAAP loss from operations, it's actually 1% of revenue. And a lot of that non-GAAP is coming from them adding back the share programs or share kind of compensation that they give. So non-GAAP is only 1% of revenue. Things are getting better. And during the earnings call, they do mention that they do expect non-GAAP profitability by 2023. So about a year and a half from now. Again, that is still a yellow flag and something investors should keep an eye out. Another thing is net cash used in operating activities was about $26.7 million. So Unity is still not making money from its everyday operations, kind of a yellow flag there, but this company has plenty of cash in its assets, in its balance sheet, that it doesn't really freak me out. Again, still yellow flags and things investors should know about. Next, I want to take a quick look at some more in customer growth, right? They do mention that customer growth is not only coming from gaming, they are also seeing huge momentum in non-gaming industries, and this is something I'm very bullish. In the second quarter alone, Unity added 3 new automotive manufacturers. They also began to work with several consumer product brands, including an eyewear manufacturer and retailer company. I am kind of curious if this is an AR VR glasses. I wish we could find out a little bit more, but that's super interesting for sure. They're also working with some other types of companies out there. Unity is also no slacker of acquisitions. In this quarter, they made 2 small acquisitions, and most of the acquisitions that they have made, I wouldn't say are huge drivers in revenue or financial changes, but they do kind of increase the overall production of it, or the overall solutions that Unity might offer, which makes Unity a stronger platform as a whole, right? And during the earnings call, they did mention a brand new acquisition as well. They are acquiring this company called Parsec. Parsec is a company that allows you to do remote desktop, and we all know remote desktop, right? Remote desktops are, I want to say, are probably one of the worst things because they suck, they're so slow, and that's something that's not helpful if you're some form of engineer, architecture, if you're doing modeling, if you're doing simulation, if you're doing gaming. So Parsec has kind of made it a very low latency desktop, remote desktop. So Unity is purchasing him. Right now, this is trusted by teams who make stuff they love. A lot of big gaming companies, as we can see, are using Parsec. They do mention during the earnings call that, again, this is another acquisition. So this would probably be the 3rd acquisitions in the past 6 months for Unity. But at the same time, this is another acquisition that doesn't really change much in the bottom line of the company's revenue or anything like that. Again, it just increases the solutions that Unity has and makes it a stronger platform. The final thing I want to take a quick look at before sharing my overall thoughts is the outlook. So right now, they did give 2021 guidance of about 35 to 37% growth compared to same time last year. And this is what I like to see, an increase of guidance. And this is compared to same time last quarter, right? Last quarter, they actually did give guidance, which was about 29 to 31% for the full year of 2021. So they have increased their guidance by a good portion. We love to see that. Investors would definitely be happy to see that. At the same time, for quarter 3, they give a guidance of about 29 to 32%. In the long term of things, Unity says that for multiple years, they expect somewhere between a 30% year-over-year growth. Some quarters might not meet that. Some quarters might do better than that. But for the full year, like we're seeing in 2021 guidance, they are expected high 30s growth, year-over-year growth. So I'm super excited. So now let me just share my overall thoughts. So Unity right now is down about 1.5%. It's down actually 1% now as I did refresh. I think earnings were strong, right? We saw an increase in guidance. We saw an increase in customers in both non-gaming and gaming. We saw an increase of customers that are paying a lot of money as well. So I do think this is a strong guidance. Unity for me will stay as a tier 1 stock. I do want to say, for me, if it drops down below 100s, if it's sitting in those low 90s, those mid 90s as well, even in the high 80s, Unity would be one that I would gladly increase my exposure at those levels. At the moment, it's already a top 5 position in my portfolio, so I have no intent of buying. But if we do have better buying opportunities after today's earnings, I wouldn't mind increasing my exposure at better buying points. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.